The cryptocurrency bull run is right around the corner. Honestly, we don't have any time to waste at all. This video right here is going to be the only video you need when it comes to strategy. If you're looking for the 100x altcoins, for the undervalued gems, to multiply your money as aggressively as possible, this video is going to lay it all out in extreme detail. Every single little point. Not only that, but I'm also gonna find an altcoin right in front of your face and I'm gonna play it all out so you can see me research it. Everything you need to know is in this one video. This video is gonna be split up into 3 sections. The first one is why crypto is the greatest opportunity of our lifetime. So I'm gonna be going over exactly the opportunity of crypto. The second part of the video is going to be going over basically how the strategy works, a blueprint to why it works, as well as how I created the strategy and everything that goes into actually understanding the strategy. And the third part is I'm actually going to live demonstrate myself researching an altcoin right in front of your face so that you can see me do it and you can replicate it for yourself. And the whole purpose of this video is to simply show you guys everything. I'm not going to leave any detail out. I've been refining this strategy for the past 8 years and I'm just going to lay it all out for you. This is the only video you need. I'm pretty sure, being that this is extremely detailed, you're probably going to have to reference this video again. And also make sure you take notes. Take notes, pause the video, actually execute on the strategy so you can have something meaningful in your life that actually changes your life in a positive direction. That is the purpose of this video, to just lay it all out for you guys. Thank you for being a subscriber. Now, being this is a millionaire strategy, I have to set realistic expectations. I can't just sit here and be like, everybody's going to be a millionaire, depending on what time and effort you put into the actual market. It also depends on how much money you have in the market. So there's 3 key variables. The first one is how much time you're actually going to dedicate to crypto. The second one is how much experience you have in crypto. And the third one is the money that you have invested in the crypto market. Now, basically how this works is, obviously, if you have more money in crypto, the chances of you actually making $1 million is significantly higher. And the same thing for all 3 of these variables. So there's going to be different types of people. Maybe you have a lot of money and you don't have a lot of time. This strategy will accommodate that person. Or maybe you don't have a lot of money in the market, but you have way more time to commit to crypto. I'm going to lay out all the realistic expectations. As you can see right here, scenario number 1, this person only has $2,000 invested in crypto. He needs a 500x multiplier. Is that person going to make $1 million? Maybe, maybe not. But at least I'm setting realistic expectations. Same thing with scenario number 2. If you have 25K in the market, you need a 40x multiplier, right? This is a little bit more realistic. And what I also did is I broke down the investment category, meaning if you do not have a lot of capital, investing in Bitcoin and Ethereum is pretty much a waste of time. Because what's going to happen right now is 3 to 10x max, maybe a 10x on Ethereum, definitely not a 10x on Bitcoin. So to get $1 million, you need to have a lot of capital if you're only investing in Bitcoin and Ethereum. Now, some people have a lot of capital and they want to invest in the high risk altcoins too. That's the best thing. That's what I do. I have a lot of capital to invest, but I still go for the high risk because they're still more lucrative. But the gist is you have to be realistic. You have to be realistic. So what I did here is I made a standard, right? So as you can see right here, 1 means like 1 to 5 hours per week minimum. And a 10, when it comes to scaling your time, means 60 hours per week. So if you could dedicate 60 hours per week to crypto, that's a 10 out of 10 when it comes to time. Experience, same thing. 1 would be like you just started this month. 10 would be like you've been involved with crypto since Bitcoin started, right? So this is kind of the scale. Now, money invested, I kind of made it a little nuanced. There's no real way to understand the scale of how much money is in the market, but 1 means basically very little investment, maybe $1,000 or less. 10 means like $1 million or more, right? So that's kind of how I scaled it. Now, for this first scenario, if you have low money but high time, you need to dedicate a lot of time, right? Especially if you have a lower experience level. If you're just getting involved and you have a lower experience level, you need to dedicate even more time. And then you need to be investing in higher risk altcoins. If you're making moderate money, if you have 25,000 in the market, right? And you have a little bit more experience, then maybe you could spend a little bit less time, right? Hopefully you guys understand. I'm trying to give you realistic expectations so you get that I'm not just making things up. I have made $1 million off of crypto. I've seen other people make millions off of crypto. I've helped people make millions off of crypto. It is very possible to make $1 million off of crypto if you set the right expectations and you're in the right frame of mind. If you start going into gambling mode, I can't help you. Look at this person here. They have a good amount of money, right? They're on the higher level, $100,000. They need a 10x multiple, and maybe they can spend less time because they have more money in the market. The point is, if you want more results, you have to spend more time with more experience. And here's just some hypotheticals. And what I want you guys to do is below in the comment section, or you can write it in your own notes, you guys should rate how much time you have to dedicate, 1 out of 10. Remember, 1 is like 1 to 5 hours. 10 is like 60 hours. Also, your experience level. How long have you been in the market? If you've only been in the market for a year, that's like a 2 out of 10. 3 out of 10 max if you've been in the market for a year. So just understand your experience level, right? A 10 out of 10 would be like you've been in the market since Bitcoin dropped in 2008. That's a 10 out of 10. So on this scale, I'm like a 6, 7, because I wasn't out since Bitcoin in 2008, but I've been doing this for 8 years. So, just realistically, and then when it comes to time dedicated, obviously you guys know I spend my entire existence. So I'm a 10 out of 10 when it comes to time dedicated. So do this for yourself. This small exercise can change your entire life, because a lot of times the numbers thrown around, millionaire, 100x, 1000x, you can get rich overnight in crypto. And I get it. Some people actually do. And that's why it's so, pushed in this industry, because some people actually get rich overnight. But it depends on what you mean by rich. Because you can make a lot of money and you can lose it just as fast. And this is what's happened to me, right? So the point here is to have realistic expectations. I'm trying to be realistic about the scenario so that you guys don't get any false impressions. And this is honest. Now, the one variable you can manipulate to benefit your life in crypto and to get the most money is your time, right? We live 90 years. That's the average life expectancy. And this is what it looks like. It's a lot shorter than you think. You spend this portion of your life in school. You spend this portion of your life at work, probably working a minimum of 40 hours a week. And you spend this portion of your life retired. This is the only portion where you're actually really free. It gets a little bit more depressing when you look at how your day goes, right? So this is the average day of a 9-to-5 worker. If we include sleep, morning routine, commute, work, dinner plus showers, and working out, only an hour a day. This is not like someone working out 2 hours a day in the gym, because a lot of people do that. You only have about 2 hours a day to commit to something, right? So those people that are like, I'm going to do drop shipping, I'm going to run a marketing company, I'm going to do this, that, and the third, and I'm going to invest in crypto. Look, can you do it? Yes. Are you going to get the higher multiples? No, you're not. The total free time you'll have if you work a normal 9-to-5 and you're actually healthy and doing the normal things is about 2 hours a day. If you're sleeping 8 hours, right? If you're sleeping 8 hours, you have about 2 extra hours a day. And this is not including Sundays, because I believe you can have rest on Sundays. But if you work Sundays, then that would add 8 to 12 hours more on this 13 hours. So the point here is that you need to clear up your life and also understand that, hey, bro, you're working for the addition of money and you're spending the majority of your life in this 9-to-5. Look at that red zone and look at the blue zone. The biggest parts that you have there are your sleep and your 9-to-5 job. So for the people that say they don't have time, this is actually true. But I believe they do have time because it's a priority issue. Their priorities are in the wrong place, because this red zone here is working for money. So what you're really saying is you don't have time for crypto. You're saying you have time for money, right? This is the red zone because you spend approximately 1/3 of your entire existence working for money. So you have time for money, but you're saying that you don't have time for crypto. This is one of the most common excuses I have. Oh, Alex, I don't have to learn for real. I don't have to be an educated investor because I don't have time. I'm just going to buy the altcoins you say and hopefully I get rich. This does not work. This does not work. You're working for the addition of money. You do have time. You just have a priority issue. And like we talked about before, you cannot get these high multiples unless you dedicate time and have an increased level of experience. Unfortunately, you can't artificially create experience. You can't. So that means that you're going to have to dedicate more time if you want to higher multiples. When I said I was going to make this realistic, I meant it. I meant it. This is real. I'm really trying to show you guys what it takes to reach $1 million in crypto, and I've done it multiple times. So the point here is, again, be realistic. Be realistic and understand that you're already spending 1/3 of your entire existence working for the addition of money. This is exactly how it breaks down, right? You're literally working to add money. This is what a paycheck is. When you should be working to multiply your money. Multiplication is significantly bigger than addition. It's simple and straightforward. This is the breakdown. This is the visual breakdown so you understand what's at stake here. There's a lot at stake. Don't waste your time doing stupid things. Stop wasting your time thinking you can run 16 different businesses. People are like, I'm going to do a shoe flipping business, sell weed on the side, and do drop shipping, but somehow make money in crypto. The reason why you keep losing your money in crypto is because you're not focused. You're all over the place and you're compromising in some area of your life. See, mine's even worse than this because I have to put family. I have a big chunk of that. That's family time. So some of you don't even have that. So please focus. I'm going to teach you how to recalibrate your existence to actually make money off the altcoin cycle. You need to watch the last video if you didn't understand that the altcoin cycle is coming around the corner. The last video I made really dove deep into that and really exposed that altcoin cycle is here. So please understand that right now, although most of you don't have enough time technically, I believe it's a priority issue. You're working your entire existence for the addition of money when you could be multiplying your money. And this gets even more depressing. This is right here where it just gets ridiculous. I just explained to you the time variable. This is the time variable, right? And time's more valuable than money, obviously. Why? Because time is finite, meaning there's a limited amount of time on Earth, right? We can only live approximately 90 years. When it comes to money, you can make as much as you want, right? So money's more valuable. Let's dive into the money equation. This is very unfortunate, but these are the most up-to-date numbers I have. The average household income and expenses in 2023 is about $80,000. So if you're making less than this, your situation's worse. And again, when I watched this right here, when I put this together the first time and I actually did the math on my life, I had this big breakthrough, a big breakthrough. This right here could be worth the entire video. Just pay attention to what I'm saying and write it down for yourself too. The median household income is $80,000. That seems high, but this is the median household income in America, right? The average annual expenses is $77,000. So this means that you have approximately $3,330 a year to invest into something, and leftover savings, $277 a month. This is on average in America. So your situation could technically be worse. It could be different. It could be worse. And you should do this math for yourself. Now, here's the actual breakdown so you can, again, look at yourself, do the calculations and compare it to this. Here's the actual breakdown. Now, when it comes to this question, I always made this question $1 million because the goal here is to try to retire with $1 million, right? Because right now we live in a system where people are working a 9 to 5 and we're kind of told what to invest. Like your company's like, hey, invest in your 401k. We never got taught anything in school about finance. I never had one financial class in my entire schooling history ever, not even one, right? But it happens to be that money is probably one of the most important variables in your entire existence. So the question is, can you retire with $1 million? Is this possible? Well, I'm here to tell you that $1 million at $50K a year is 20 years. So if you retire at the age of 65, you'll run out of money if you lived off 50K at the age of 85. And the average life expectancy is 90. So you're going to run out of money. You're going to have to rely on your kids. So if you don't have kids, you're screwed. So definitely have kids. I'm not trying to attack anyone, but seriously, try to have kids for sure. But the point is if you don't want to rely on your kids, it's going to take you 301 years, and this is without interest, to save $1 million. Now, that forces you to invest. So if you just saved, you cannot save your way into retirement. It's impossible. All those people are like, oh, you should save all your money. They have no idea what they're talking about. You should have savings, but it shouldn't be for retirement. You should be investing. This is a 401k. They put it in the stock market, right? They put it in the stock market, and the stock market gives you a 12% annual return on average. And it's significantly less in some situations, but throughout the last 20, 30 years, it's about 12%. So if you take that into consideration with compound interest, meaning it compounds, I'm not going to go into explaining that, but basically, as you invest over a monthly or yearly time horizon, that investment gets bigger and bigger through the compound effect. You'll save approximately $633,000 in future dollars. Meaning, with this 277, if you invested it in the market and it compounded, right? This is the way they traditionally taught you to do it. They're like, hey, just invest, let it compound, right? If you do that consistently, right, and start at the age of 21 till you're 65, you will have $633,000 in future dollars. Now, future dollars are going to be different from today's money. Why? There's something called inflation. Now, this is really low, by the way. Inflation was just 6% like 2 years ago. But on average, inflation is 2.4%. So if you adjust it for inflation, then in the future, when you're trying to retire at 65, the amount of money you'll have, taking all of this in consideration, investing, everything, will be $226,000 of today's money. Your purchasing power will be significantly less because of inflation. So if you adjust it and you're like, okay, well, how much money do I need in the future? What you really need is $2.8 million. If you're adjusting for inflation and inflation stays the same, you need $2.8 million is what you actually need. And you need to make significantly more money. That's the point I'm trying to make here. So for the median household income of $80,000, saving the $277 a month leaves you without a retirement. When I started studying the system and I looked into my life and I did all the math and I actually started to seek the truth, I came to this realization and it actually changed my entire existence. It built a fire to want to be an entrepreneur, to want to build something, to want to learn how to invest, and to essentially want to make more money. Like, we don't have an option. This current system is built against us. If you think about it right now and you ask yourself this question, the 5 friends closest to you around you, ask them how much they're making. It's probably going to be under $80,000 a year. So that being said, this is bad. Your current situation is probably worse, depending on how much money you're making, right? The system is built against you. And when I started going through this journey of my life and started trying to make money aggressively, I was like, it was like this eureka moment where I had to change. And this is where the opportunity of crypto changed my entire existence. So the point here I'm trying to make is you have a moral obligation to build wealth, not just for yourself, but others. This $277 a month, it's just not enough. It won't fund your retirement. It's not going to free you from the grind or empower you to live comfortably. It won't allow you to make any meaningful impact on the world. Imagine all the lives that you could change, right? Lifting your family out of poverty, right? Providing shelter for the homeless, creating security for those you love. Think about all the impact. This is not about you. When you stop thinking about yourself and you start thinking about other people, you start to realize that this is much bigger than you. We have to get the higher multiples, not just thinking about ourselves, but other people. And cryptocurrency is an opportunity. It might seem like all doom and gloom, but to be honest with you, there's people that have never experienced this type of wealth transfer in human history. Just think about that for a second. There's people that did not have access to the internet or anything, right? And so this is a huge opportunity. You just happen to be on the cusp of the most innovative asset class on the face of the planet. You're here. You better take advantage. We went over all the time constraints. We went over all the financial constraints. But the opportunity is immense. The opportunity is insane. If we look at 2021 cycle, the average percentage increase of the top 10 altcoins was 15 million%. The breakdown's right here. You can cross-reference this with your own research. I know people are gonna be like, oh, that sounds too good to be true. It's not. It's actually true. It's actually true. 2017, the average percentage increase was 54 million%. Unfortunately, I have to be the bearer of good news because I got to tell people about this 34 million% average increase if you combine both years that people don't want to believe. That's why it's unfortunate, because nobody wants to believe this. People think that I'm selling a get rich quick scheme. Obviously, no one can get rich quick. Obviously, this comes with massive risk. All of this comes with absurd risk. It comes with discipline. I have lost all of my gains, guys. The first cycle when I was trading, I lost all of my money in crypto. So it's hard, but it does not mean it is not possible. And I refuse to be a pessimist. I'm an optimist. I know you can do it because I've seen thousands of people do it. And I do it myself predictably every single cycle with the strategy that I'm going to be laying out in this video. Just take a second, pause the video if you have to, screenshot this. This is important you understand. Keep your eyes on the prize. It's not all doom and gloom. Yes, I get it. FTX exchange bankrupted everybody and robbed people's money. I get it. There's exit scams. There's pump and dumps. There's Ponzi schemes. But at the end of the day, the top 10 altcoins by the percentage increase did stupid numbers. Like absurd, crazy numbers. So if you don't get the 34 million% increase, maybe you'll get, I don't know, a 10,000% increase. Do you know what a 10,000% increase is? That's 100x. So when people are putting 100x in their titles, 100x here, 100x there, is it possible? Yes. Let me say it again. Yes, it is possible. And you have a moral obligation, like I've been saying. Your current situation is not set up for success. What you're currently doing is not working. We went over this obligation here that you have. The current system is not set up for you to retire. Just think about the age of 65. Thinking about all my older relatives and my family members and my parents complaining about how they can't retire. And they had a way better system. 40, 50 years ago, the system was significantly better than what it is right now. Cryptocurrency is the future, and you have no choice. It's a get rid of it or get left behind scenario. All these people are like, oh, that's just another market. I don't want to get involved. No, what I'm trying to tell you guys is that you legitimately have no choice. You're going to have to do it eventually. This is an upgrade to the internet infrastructure. This is the new internet. I'm saying it slowly so people can understand. This is the new internet. You had to adopt the original internet, right? It was like forced upon you. Like there was no choice. I mean, you could technically have the choice of not adopting the internet and be in a cave somewhere and not use any modern technology. Sure. You could do that with crypto, technically, or you're going to eventually adopt it because it's going to be in all the software that you use and find valuable, right? So the point is, financially, in every aspect, technology-wise, you're going to have to adopt crypto. You might as well adopt it early on because there's something called the first mover advantage. You have an advantage if you get in early. As of December 2024, the global stock market's total market capitalization is approximately $123 trillion. Cryptocurrency right now is only $3.2 trillion in market capitalization. Guys, we are so early. We are so early that I don't even think you can comprehend how early we are. We are extremely early. And see, the thing is, cryptocurrencies are not stocks. Cryptocurrencies are everything. It's an upgrade to the internet. Look at the cross-border payments, 156 trillion. Look at precious metals. Look at art and collectibles. I mean, put it all together and you have $2,346 trillion worth of value that will be held on a blockchain. And I'm not just saying that to say it. I'm telling you that this distributed ledger technology will be adopted by every organization on the face of the planet. If you just understand what blockchain technology is, and I'm not going to go into that, you should definitely look into it for yourself. If you just understand what it means, it's an upgrade to the internet. So just like every one of these markets are now held on the internet, every single one of them, they're communicated on the internet, the data is transferred through the internet, it's all internet based. So if we upgrade the internet, cryptocurrency is going to adopt all of this value. The cryptocurrency market is valued at 3.2 trillion, and all of these combined are 733 times bigger than crypto. We are operating on an entirely new dimension. This is the crypto opportunity that I keep trying to explain to people. It's a whole nother world. Nothing compares. It's time to start taking this serious. Why are you watching Netflix or playing video games when you're broke? Why? When we have these crazy opportunities right in front of your face. I just cannot believe that somebody could be not financially stable, have no savings at all, and is still working a 9-to-5, paycheck to paycheck, and they're still playing video games and watching Netflix. It doesn't make sense to me. And they even know what crypto is. They know it. They see it right here. They see that this opportunity is real, but they're still not taking it serious. I don't understand. Do you want to stay the same forever? That's a question you have to ask yourself. This is a whole nother dimension that you're getting involved with. And if you don't take advantage, I don't know what to tell you. And what's even crazier about this is that people don't even comprehend that I don't even care about this cycle that much. We are so early that next cycle is going to be very lucrative as well. To me, crypto is a lifelong skill. I don't love crypto. I'm a futurist. It just happens to be that crypto is the most lucrative by far, and there's nothing that compares. So I get involved with crypto, and whatever happens in the future, it happens in the future. But in general, if I have $1 million now and I 20x it, that's $20 million. But if I get a 20x on that 20 million, right? That's 400 million. So whatever you do this cycle will set you up for the next cycle. If you're watching this video, you have to take this serious. Because if you make that 200K, that 250K, that 500K, even that 50,000, right? Even if you make 50,000, even if you get 25,000, and you take that 25,000 to next cycle, how much could that be for you? So whether it happens in this cycle or the next, you need to start preparing for the future. This is a lifelong skill. I can't believe people don't know how to invest. It just blows my mind that people don't know how to invest their money when they spend 1/3 of their entire existence working for a paycheck. People are like, oh, I don't need to learn how to invest. I don't want to learn because I don't have time. I'm like, of course you have time. You're spending 1/3 of your life to get this paper money. You put the paper money in your bank. Of course you have time. You spent 1/3 of your life. You might as well learn how to manage that money too. So you don't have to spend 1/3 of your life and you can become financially independent. Kill the 9-to-5. Eventually. We all got to, work our way there, of course. But bro, come on. Understand, right? Think about other people. Stop thinking about yourself. This is a problem, bro. People are so selfish. With $400 million, if you, for example, supported a homeless person in the United States. So this is the United States, which is like one of the richest countries on the face of the planet, right? First off, a homeless person in another third world country will be significantly cheaper than this. Significantly cheaper. But let's say you stick to the United States, right? On average, it costs about $13,000 annually to support a homeless person. With $400 million, you could support 31,000 people for an entire year. Why are you thinking about yourself? Why? Why do people think about yourself? The reason why you can't get work done, the reason why you can't focus, and the reason why you're not putting in effort for this crypto cycle is because you only think about yourself. It's selfish. There's other people in the world that can benefit from your gifts, and you keep it to yourself. And this is why you stay poor. This is why people are stuck in a 9-to-5. They're not thinking about anybody else. And so when you're only thinking about yourself, the work that you put in will only be for you. And so it'll be little work. It'll be baby work. You got a little baby work over there. Somebody that thinks about 31,000 other people that are living in poverty is going to put in extra work. They're going to be a little bit more focused than you, right? This is what 30,000 people look like. Stop thinking about yourself. This opportunity is way too big to pass up. And you guys are playing this willy-nilly game, thinking I'm an expert because I watch YouTube videos. I watch YouTube videos, so I'm an expert. I'm not taking it serious. Guys, do you know it takes me approximately 50 hours worth of research to buy one coin? Focused time, focused research, meaning like an entire work week of like 50 hours an entire week. I'm researching because I'm watching YouTube videos. Look, I'm not trying to attack you. I'm trying to wake you up. It's time to wake up. It's time to wake up. Stop thinking about yourself. Because the decisions that you make today can break generational poverty and create a ripple effect that transforms reality. Do you guys understand that if you do help, let's say even 50 people, those 50 people could be put in a situation to help 50 more people, and then they will help 50 more people. And there's an effect that positively benefits reality just off of your one sacrifice, which is trying to make money off of crypto as aggressively as you possibly can. Your one small move can change reality in a big, meaningful way if you get out of your own head and you start taking this serious. The opportunity is now. Stop playing small ball. It's time to stop playing around. I love showing these charts every single video just to wake people up a little bit because it is really real. So what we're looking at here is the 2021 cycle. And as you can see, the opportunity is right in front of your face. 5,000%. This coin right here, these are the top 10 coins by percentage increase from the 2021 cycle. 10,000%. I mean, I don't know how much proof and data that you need to really just kind of change your life and stop playing around, stop joking around. You should feel convicted the next time you go hang out with your friends smoking weed and drinking. That weekend when you want to go drink and want to feel good about yourself, you should feel convicted because this opportunity is right in front of your face and you're lollygagging. You're playing games when there's people's lives at stake. Think about your family, right? Think about your family. Think about all your friends that could be potentially elevated. Your friend group will be elevated based off of what you are doing and how your life is being benefited from the cryptocurrency market. But you're worried about Netflix and girls. Wow, it's hilarious to me. Look at these percentages. I show it every single video, 4,377%. Every video, just to remind you guys, when the bull market comes and you look at these percentages and you're like, dang, I should have taken it more serious. I'm going to be like, yes, you should have. Yes, you should have locked in. You should have locked in and been focused and disciplined, but instead you decided to play all those games. If you don't sacrifice for what you want becomes a sacrifice, and it just so happens to be that you're not ignorant to it. Now you know. Now you know that this is real, right in front of your face. Just take a look at these coins from 2017. So this is from 2017. It's even crazier. I don't even like saying these numbers out loud, but this is like from the point the coin started taking off to the top. I mean, the altcoins have the opportunity. Look at this. Look at this, 93,000%. 805,000 guys percent. Just to give you context, 100x is 10,000% increase. 100x is a 10,000% increase, and we have coins here that are doing 50,000. This is XRP. Look at this, 28,000% increase. Look at this, 128,000%. 253,000% increase. 19,000% on Dash. 22,000%. I really want you guys to understand this. 22,000%. I'm going to stop now, but I want you to understand the opportunity is real and it's right in front of your eyes. And you have to change. I laid it all out, guys. I laid everything out. I laid out how much experience you need to have, how much time you need to put in, how much money you need to have in the market. I even broke it down to your daily habits to see what you're doing on a daily basis so you understand that you need to dedicate time to crypto. I broke it all down for you. You have no excuses anymore. The opportunity is right in front of your face. And the reason why this opportunity is so big is because we have the world's biggest companies jumping into cryptocurrency. And look at the evaluation of these companies. The credibility is insane. Back in the day, cryptocurrency used to be a scam, right? Everybody was like, it's a scam, it's a Ponzi scheme. How can it be a Ponzi scheme if we have JP Morgan, Goldman Sachs, Fidelity, IBM, Amazon, Google, Microsoft, Apple? These are a couple of the companies. There's so much more that we don't even know. NVIDIA, the world's biggest AI tech company, is involved with crypto. How could anyone even think it's a scam when this much credibility is backing cryptocurrency right now? I don't understand that. Not only that, but we have a pro-crypto president that's bringing regulatory clarity, is going to pump the market. The man owns an NFT collection. Trump owns an NFT collection. His son owns a coin. And this is in less than 50 days. Less than 50 days. This is happening. I don't know what else you need. The spot Bitcoin ETF and Ethereum ETFs are like the official seal of approval for any asset class. If you created a new asset class and you wanted that one graduation moment where like you graduate college and you're legit because you have a certificate, that is this. When the Bitcoin and Ethereum spot ETF got approved, to me, that was like, it's over. Like crypto's a legitimate asset class. There's nothing anyone can say. Not only that, but some people even argue that this is the biggest bull run we will probably ever experience because of the Bitcoin and spot ETF. And let me show you why. As you can see from this chart, this is Bitcoin's price. And as you can see, we have never broken all-time high before the Bitcoin halving. So there's a Bitcoin halving, and it's an event that happens in Bitcoin approximately every 4 years that sends us into a big bull run because of scarcity. I'm not going to go into the explanation of that. But as you can see, every time we have a top and a bottom. But before the next cycle, we never break all-time high. This is all-time high here. We were below all-time high. Look at this cycle. We were below all-time high. Look at this cycle. We were below all-time high at the point of breaking the Bitcoin halving. Look, this is all-time high. This is all, we're below it every single time. Look at this cycle. We are above the previous all-time high. We broke the all-time high before the Bitcoin halving. This has never happened before. So some people are even saying that this is the biggest, most bullish bull run we've ever experienced in crypto history. So the big point I'm trying to make is that people don't make money because they think they can't make money. But the only difference between me and you is the fact that I removed the block of money, time, and experience. I spent the last 8 years losing money in crypto, spending time in crypto, and gaining a massive amount of experience, right? It's a straight line towards financial independence. If you want financial independence, you're supposed to walk the straight line. But for some reason, they feed us with this lie that we should be going to college, getting all of this debt, right? Working the safe life that they pretty much built for us. Like, why do we go around it? I don't understand when all you need to do is just have time, money, and experience to get to the end result. Why do we beat around the bush? Why do we need a certificate? I really don't like certificates. When people are like, I'm going to get a certificate in this, I'm like, why? Why? Why do you need a certificate? The whole point of a certificate is something to give you a seal of approval. A seal of approval for what? When you can just do the work. If you're a coder, be the world's best coder, right? What do you need a certificate for? What do you need a certificate for? It doesn't make any sense. Get results. Results are the answer. And results are a byproduct of money, time, and experience. All you need to do is spam these 3 variables that I laid out to you in the beginning of the video. Get more experience, spend more time, get more experience, spend more time, invest more money. Just keep doing that, and eventually the block removes and you get to financial independence. Why do they run us around the ringer? This is not safe. They call it the safe life, but I just proved to you that this 9-to-5 life at 80K a year is not safe at all. It's actually a lie. So they essentially run you around the ringer, but they're lying to your face at the same time. It's insane. I don't get it. Why do they do this to us? And I get why people are skeptical, to be honest with you, because these returns are ridiculous. So what I want to show you is results, right? I told you all you need is experience, time, and money. If you have that, you can get results. These are people from my group, right? We call this the wall of results for a reason, because it's a little bit overwhelming. So we're talking about like hundreds of slides. I forgot. What is it? Like 450 slides or something like that. This is a real thing. We are not making it up. All throughout the years, not just this year. Not just, well, some of you benefited from my calls earlier this year, but it's overwhelming. The wall of results is something, I don't like using this all the time, but these are the results people have gotten, and I know for a fact it's real. I just know for a fact that this crypto opportunity is a real thing if you take it serious. If you take it serious, look at this. Look at this. It works. We're not done yet. Hold on. We're not done yet. Look at this. 45%. I mean, 50%, 52%. I mean, 200%, 100%. The whole point of what I do is to help you guys make more money than you spend. That's literally, look at this. 12K in profit, one trade. This dude went from negative 50% to positive. You get the point. This person got a 334% increase. I mean, this person made $9,000 in one trade. This person doubled their portfolio. I think you get the gist. 3K in profits, 1,000 to 3,000, 345% trade. I mean, I don't know how many times I got to tell you guys, but this is a real opportunity. Crypto's not a joke. These are people from my group. The crypto opportunity is right in front of your face. Start taking this serious. It's not too good to be true. People are making money off of crypto. 55K in 5 weeks, 100K club. This person turned 14K to 60K. I mean, I'm laying it all out for you. This person was, I forgot his age. He was definitely below the age of 30. And he made 6 figures, 10x his investment, 16K overnight. I mean, 20x his money. Like I don't know what else you want me to tell you. This is not a lie. All that just to tell you that cryptocurrency is real. It's a real opportunity that people are actually making money off of. And I understand where the skepticism comes into play because it seems too good to be true. I completely understand. These are people that have traded in my groups that have produced results. And that has nothing to do with any of the comments on YouTube, which, by the way, it could be thousands more. Like, a lot of people make money off cryptocurrency. And today, what I'm going to show you in the strategy can potentially change your entire life. I'm going to lay it all out in extreme detail. But first, before we continue, I did want you guys to understand that I am completely closing the doors to my group. So as you guys know, I have a trading group and I'm closing the doors today. Today is the last day to get involved in my groups. You're always going to get free information on YouTube. I mean, watch this video. You'll see how deep I go into the strategy. You're always going to get some high quality information from me. But at the end of the day, it requires another level of effort. You have to be around me. You have to come to my face-to-face live Q&As, right? You have to see me. You have to essentially work with me. That's the whole point of the group. This is how you get results as quickly as possible. Think about Michael Jordan. Imagine if you could, train with Michael Jordan. Am I the Michael Jordan of crypto? Probably not, but I'm definitely up there, right? I've been doing this for 8 years, produced significant results for myself and others. So you can trade with me, with the community. In this group, you get all of my buy and sell calls, everything, all of my buy and sell calls. You get everything. You also get the exact strategies on how to construct your portfolio from scratch based off of the principles I teach. So you'll get portfolio structure management. And of course, you're going to get accommodations when it comes to actually speaking to me and trading with me. That's the point of these groups. You can't do that on YouTube. So the doors are completely closing. Today is Cyber Monday. It's the last day. It's 50% off. And then it's done. I am closing the doors. You will not be able to purchase this project tomorrow. Tomorrow, you will not be able to get in my groups. I'm officially closing all the doors. Let me say it again. I'm closing it and I'm not playing. The reason why I keep saying it is because people are going to be upset. People are already upset. I'm getting the emails. They're like, oh, but I can't afford it now. No, this is what it is. And the reason I'm doing this is to focus. I have to focus at creating an even better strategy. This strategy is cultivated over the past 8 years of rinse and repeating, trying this, trying that, trying different things. And I'm making a better one. I'm dropping everything. This next month, I'm focusing my entire existence on creating the best strategy ever. And so get in and I'll reopen it in the future. Somewhere down the line, I'm going to reopen this group. So don't stress out if you can't afford it today. It's fine. Just watch the YouTube videos. But I just want you guys to know that this is no joke. I'm not playing with you. Now, before I actually execute the strategy right in front of your face, I want to show you how the strategy works and what it's composed of so you understand where I'm coming from. So the first thing you have to understand is I've really been doing this for a very long time, guys. I actually first started getting into crypto in 2011. I had this business plan and I brought it to my dad and I was like, I'm going to turn the garage into a mining facility. And he's like, no, we're not going to do that. When I was like, I don't even know. I think I was 16 or something like that. And then I actually bought Bitcoin in 2015. It wasn't that much. I just bought like a small amount so I could buy something on the internet. Then I started mining Ethereum around here. Look at this trajectory. I started mining Ethereum right here. I remember at this period of time, I was mining like 1 ETH a day. Literally 1 Ethereum a day, which is crazy because right now Ethereum's worth like what, $3,000, $4,000? I don't even know. Ethereum's worth a lot of money. So that was 1 a day. But at the time it was worth like $7. Like 1 ETH a day was worth like $7, right? Then I started buying crypto because it went crazy. Ethereum went insane. I was like, wow, this is amazing. I was at a sales job and I started buying a whole bunch of crypto. I kept buying, right? And I didn't sell anything. And I actually went homeless and broke. It wasn't homeless like a person on the street. I went basically had to move back in with my parents. And then I had to move into my friend's house for 2 weeks. And it was a whole horrible situation. Then I went back all into crypto. And this is where I got really rich. This is like my big breakout cycle. And I have unfortunately lost my entire business, but my trading was crazy. I made a lot of money Actually, my business was so bad that I used to fund my business based off my trading, which is not recommended. They should be exclusive from each other. But the point I'm trying to make here is I've been doing this for a long time. And the first cycle, I actually lost all my money to trading. And so there's a lot of you that probably already been through a first cycle. You hodled and lost all of your money last cycle, right? Maybe you've already experienced that. But if this is your first time here, just understand that it takes a lot. Just because these percentages are crazy and everything goes up in value does not mean you're going to make money. So just understand that I've been doing this for a very long time. And you have to like humble yourself. Some people are coming here with like 6 months of trading experience, 1.5 years of Forex experience, thinking that they're going to win. Sure, you might win, but bro, like you could have made way more money if you humbled yourself. This is a big element that you guys have to really, understand, because how strategies work, people don't know this, but strategies are not like blueprinted, like basically like everybody in the world does the same strategy. What happens is somebody has to go through this. So what I do is I develop theories. I take the trade based off my theory and I track and adjust. And I've done thousands of iterations of this. This is how strategies are created. If you find a successful trader, chances are they've either gone through this themselves or they took the system from somebody else that already has gone through this. So again, you develop a theory on the market. So you're like, hey, I think market's going to go up because of this. You take the trade based off your theory and you track and adjust. And I've been doing this thousands. When I mean for the past 8 years, when I mean thousands, guys. I've been in full-time crypto for almost 6 years. I've been in crypto for like 8, 9, and I've been full-time for almost 6 years. Full-time, meaning I've been doing this like over and over again. Like over and over and over. And not only that, but I take other people's theories that have been refined. Then I, test that. And I've been like fine-tuning this trading strategy for a very long time. And the main point I'm trying to make here is that, hey, bro, this is not that day trading strategy you got from that one guy 2 years ago that sold you that thing. No, it's not. This is refined through specifically crypto. This is a pure crypto strategy crafted through the fire, refined into gold, and designed for mastery. This has been refined through the fire specifically in crypto. I didn't take a day trading strategy from some other industry and try to bring it in here. I've seen people do that and get wrecked. Crypto is a whole new market, and there's different types of traders. For example, there's scalp traders. They usually focus on quick trades within minutes, sometimes seconds. Sometimes people will take a trade for 30 seconds with like 1,000x leverage. Those are scalp traders. There's day traders. They buy and sell within the day period. There's swing traders. They hold positions for days or weeks and they swing, right? Position trading is what I do. So you understand how my trading strategy works. I am a position trader. I hold for positions for years. I don't know why it says weeks or months. I hold positions for anywhere to 6 months to 2 years. And I focus on the macro trends and longer term opportunities. And investors are pretty much, they never sell. So I do sell, but I take a longer term approach. There's a lot of people on the internet telling you to hodl. They're telling you to DCA. They have not really thought this out. It's probably the first time for a lot of you that you're hearing this, unless you heard it from me before. But I'm telling you right now, like most crypto traders don't even know that they're a position trader. They're just doing stuff randomly. I'm telling you right now, I'm a position trader. I hold from anywhere to 6 months to 2 years for longer time horizons. But there's a very, 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 very specific reason why I'm a position trader. It's very specific. Let me show you why. The reason why I'm a position trader is because Bitcoin moves in Bitcoin halving cycles. So within these cycles, there's always a bottom and a top, bottom and a top. So this period from here to here is about 2 to 3 years. So the bull runs last 2 to 3 years. This is why I try to buy altcoins here. I'll buy altcoins here, right? Bitcoin moves up, brings all the altcoins with it, and I try to sell here. And then I rinse and repeat. This is why I'm a position trader. People don't know what they're doing. They're just guessing. So my strategy is a position trader strategy. And this right here is pretty much the foundational formula for why it gets so many results. What I use is aggressive risk management in a high risk environment for asymmetrical returns. So again, I put myself in an extremely high risk environment. which is crypto. I showed you the percentages. I showed you how crazy it is. Being that these percentages are, in some cases, 340 million %, just keep in mind, a lot of them will exit scam you. It's high risk, high reward. But in this high risk environment, I use aggressive risk management. I aggressively manage my risk, and this gives me these crazy asymmetrical returns. So this is what I mean by that, right? If you put money into an investment, right, you could only lose the money that you invest. So for example, let's say I go into this extremely high risk trade for some meme coin or something like that, and I put $100. The only amount of money I could lose is that $100. This is not the same with other places. There's other places that you could lose significantly more than that. I'm not going to go into that, but basically I can only lose $100. This is what you call spot buying. This is a spot buying position trading strategy, right? But the high returns, extremely high returns, could be 10,000, 50,000, 100,000, 340 million %. The potential upside is absurd. This is what you call an asymmetrical environment. You could only lose 100%, but the upside is 340 million % increase. So this gives you a large margin of error. It's much easier to make money when your profit is 10,000 than if your profit is only 20%. If your profit's 20%, then you need to get in and out quick, and you need to have very specific price targets. I don't do that because my profit margins are absurd. Sometimes they're like 20,000%. So even if I'm wrong about the top, or even if I'm wrong about the bottom, the margin of error is so big, there's so much percentage to work with, that the chances of me coming out on top when it comes to an asymmetrical return is very high. The chances of me making money are higher because I have such a big profit margin. This is why this strategy works so well. It works so well because the profit margins are so high. I'm not telling you guys are going to 340% your money. I'm not going to say to your face that you guys are going to do a 340 million % return on your money. You're not. Can you get in a trade that does that? Yes. Will you get the 340 million %? Probably not. But you'll probably get like a 5,000%, right? And that's the point. It's an asymmetrical environment with high risk, high reward. But we must use aggressive risk management. And the risk management is the vast majority of the reason why people in cryptocurrency always lose money. Ask your best friend that's been in crypto for one cycle. Ask him if he actually pulled out cash last cycle. And 9 times out of 10, they don't, because they have no risk management in play. They don't know how to effectively manage their risk. And this is basically gambling. They're gambling in a high risk environment. And the problem with that is that it gives them the perception that they are making money. It looks like it on paper because their number is going up. The coin is going up in value, but then they get wrecked because they have no way to sell. They have no exit strategy. They have no way to buy in. They have no risk management. And they lose all of their money. This is what happened to me the first cycle. You need consistent returns, aka you need risk management plus a high risk environment. This will give you asymmetrical returns. This strategy is so specific and it's been refined for a very long time. I've been going through this. One time I was a short-term trader. One time I was an investor, right? That first cycle, I was an investor. I was like, I'm never going to sell ever. And then Bitcoin dropped like 90% and I lost everything, and I ended up selling because I needed the money at the bottom, which is like what usually people go through because they overinvest and they're gambling and they have no risk management. So the strategy I'm giving you guys for free in my video is the SMART strategy. This is from my group, and this is what it looks like. You first seek the market trend, you monitor liquidity, then you do altcoin fundamental analysis, you aggressively manage your risk, and then you track your trade. A simple 5-step strategy. It's called the SMART strategy. And as you can see right here, I'm literally going to run through all of this so you guys understand it. But the gist is very simple. I'm going to take it slow for you. The gist is very simple. The first thing is you have to understand what direction the market is going in. So if we are in a bear market, it's not time to buy altcoins. You don't want to hodl this. Don't hodl that. Please do not hodl that. Because if you hodl this, you can lose 75% of your money. Now, what people don't understand is that this loss of 75% is bigger than you think. People think that just because you lost 75%, oh, it's not that bad. All I have to do is make 75% back and I'll break even. Not the case. That's not how percentages work. To break even on a 77% drop, you need to make 346% increase. So there's a whole bunch of people that bought in like right here. They're like, oh yeah, man, I lost a whole, but I rode it out. And they're just now like breaking even. They're just now breaking even. It's like you wasted all of this potential and all of this potential because you bought into the hodl strategy. This is why being a position trader is the best. Because the goal here is to sell. So you first have to seek the market trend. You have to understand, are we in a bear market or a bull market? You have to understand that. And the way you do it is really long-winded. I want to go into specifically the altcoin strategy in this video. But the gist is you have to seek the market trend. You have to understand. And the best explanation I can give you is the Federal Reserve. The Federal Reserve is by far the best explanation I could ever get on the direction of all risk-on assets on the face of the planet. Every risk-on asset in the world, it's the Federal Reserve that will give you your answer. Now, once you understand the market trend, the next step is to monitor liquidity, right? To understand if you're on the right layer. So let's go through that briefly. We're going to run through this, right? Seeking the market trend, then you monitor liquidity to make sure you're on the right chain. Let me show you what I'm talking about. So these are the layer 1s and layer 2s of the blockchain, right? So basically, the point of this is to show how much money is invested in a blockchain. Look at this right here. $175 million. It might seem like a lot, but it's not. Look at Cardano, $272 million. These are very small numbers, guys. There's a reason why I won't invest at 750 million is not a lot, right? Because if we look at Ethereum, this is $8.1 billion. So what happens is you want to make sure that the chain that you're buying on actually has liquidity. There's money that can flow into it, because what happens is that the money from this chain will flow into the coin that you purchased. So for example, let's say you purchase Joe Schmo coin and you're on Optimism. There's only $175 million that could potentially flow into your coin. The issue with that is that this chain has thousands of coins. This is not every coin. There's so much more than this. Optimism has an absurd amount of coins. So you have all these projects fighting for such a small liquidity pool. This is why it's so important that before you buy any coin, you must know what chain you're going to purchase it on. And there must be liquidity. It's one of the most important variables. If you buy a coin that's on the wrong chain, you can get the market direction right, still make a little bit of money, right? You could get everything right. You could buy the best fundamentally sound coin. Your project could be run by Elon Musk himself. But if there's, probably not. But if there's no money on the actual chain that you're buying on, then the money can't flow into your coin. So this is horrible. This is horrible. I invested into some coins on this chain and I got wrecked. I won't make the mistake again. These are very small. This is why I've always talked about base. $2.15 billion, right? $2.15 billion. It's like passing everything at this point. Solana is the only one that has more liquidity. So obviously Solana coins have been doing well. So you want to make sure you're basically pivoting yourself on a chain that not only has a lot, but it has the potential to grow a lot. This is fundamental analysis, and that's what the smart strategy does. The smart strategy will break down exactly how to determine if this chain is going to do well in the future. Now, a really good way to understand how well a chain is going to do is to look at the biggest decentralized exchange. Now, the biggest decentralized exchange on Base is Aerodrome Finance. One of my favorite coins, by the way. I've been talking about it for a while. I'll be making a full Aerodrome Finance video in the future. But the point is, look at the growth of this, $1.54 billion, right? This is a lot of money, because you got to understand the coin that you're buying, whatever coin it is, the undervalued coin, the 100x coin that you're actually researching, it's going to be on this actual exchange. And on the exchange, there's liquidity pools. There's pools of money on Aerodrome that my coin is in one of those pools. And so it's super easy for someone to just move from one pool to another. And then if they do that, the price of your coin increases. it's trickle down economics in crypto. You go from the top and you go all the way down. You go from the chain. Now we go from the biggest decentralized exchange. The biggest decentralized exchange is Aerodrome in this case. So I want to make sure that the coin I buy is on Aerodrome Finance because that's where most of the liquidity is at. Now, if the coin that you're buying is on both Aerodrome and the second biggest, which would be like Uniswap, like this is a double win, right? This is even better, right? Super important. Now, if you notice, Uniswap had way more liquidity, right? Why is this number 2? The reason why it's number 2 is because Aerodrome is a Base-specific decentralized exchange. So Base, right, is its own layer. It's a layer 2 that stacks on top of Ethereum. Aerodrome is a specific decentralized exchange that was created for Base. And this is why they basically put it number 1, because this is growing so fast. It's crazy how fast Aerodrome has grown. It's like one of the best, it is the best, I believe, decentralized exchange in all of crypto besides Uniswap. Uniswap is obviously first because there's so much more money, but Uniswap has been out for so much longer than everybody else. Uniswap has been out for significantly longer than everybody else. So it's already gone through a whole bull run, right? So Aerodrome is like up and coming in comparison to Uniswap. So my coin needs to be on Aerodrome and Uniswap if I'm buying it, right? And this is what the smart strategy means by monitoring the liquidity. Make sure the decentralized exchange has pool liquidity. You have to make sure that the protocol TVL, whatever protocol you're on, needs to have a good amount of TVL or total value lock. You also need to look into the exchange volume, right? So you can look at the exchange volume. You click this tab over here on DeFi Llama and you can see that this exchange has a lot of volume. It's healthy, right? You can compare it if you want. Let's look at another exchange, for example. So I have 2 exchanges here, one Aerodrome Finance, and you can look at the volume, right? Look at the volume. It's increasing consistently. It looks very healthy, and it's getting into the 50, 60, $70 million range here, even to the 1.1 billion at one point, right? Now let's look at this other decentralized exchange on SUI, SUI, very popular. A lot of people have been talking about it. Look at the aggregator. Look, volume by chain, right? And the volumes are different depending on the platform, but we're only talking about 1 million or so here. This is not a lot. Now, this is the actual Navi protocol. We have to look into the decentralized exchange volume. Unfortunately, I don't believe they have that, but you could see the token volume, right? And kind of get a gauge of what's happening, right? 24-hour token volume, right? Let's type in Navi to see if we can actually get, yeah, they don't give you the actual exchange volume, but I believe CoinMarketCap can give you the exchange volume. So let's go to CoinMarketCap, right? And then we could actually look at the exchange volume that Navi has. It says 5.21 million, but this is the coin. It's a little bit different, but it gives us a gauge to see how much people are actually trading this coin or whatever the case is. And the main point I'm trying to make is that you want to, essentially compare the volume and different perspectives to try to get yourself an answer, is to make sure there's safety, right? Because if we go back to the strategy, again, we have, once we understand the trend, we have decentralized exchange pool liquidity. So we make sure that the pools are big for the coin that you're buying. Then you make sure it's available on exchanges. And obviously the bigger exchanges, the better. Then you make sure the protocol that you're buying on has good TVL or total value locked. And then you make sure that the exchange actually has volume. And the whole purpose of this, whatever coin you're buying, right? Or even if you're researching on a specific chain, you want to make sure that you buy on the correct chain. I don't care how good your fundamental analysis is. I don't care how deep your research is. If you buy the coin that's on the wrong chain, it's not going to make you any money. You must set yourself up for success by putting your efforts on chains that have good liquidity, good volume, really, really, really good stats to basically make sure that your altcoin fundamental analysis is really, really good. And I'm going to go into this part now. We're going to actually break down a coin that somebody's been talking about in my group that I thought was really cool, so I can show you a good example of what a good altcoin looks like. Now, this coin right here is called Virtuals Protocol, and this was actually a really good example. I remember when Ashley showed me, it was just really, really good. Look, it's on Aerodrome Finance. You guys know I like that, right? It's on Base. It's on Base, and I want coins on Base because I just went through that part of the strategy. But look at the actual liquidity pools. So usually what I'll do is I look at the liquidity pools to make sure that there's a lot of money. Look at this, 45.46 million in liquidity. That is really, really good. This coin actually has a lot of liquidity. To me, that is really good. So this gives you safety. Liquidity doesn't mean that the price will increase. Liquidity means that there's opportunity for price to increase or decrease. This is basically the thing before the price increases or decreases, because if there's no liquidity, then you can't even sell or buy it. The whole point is that they're pools, right? So that's the first thing you want to make sure is that this coin has liquidity, and it does. 45.39 million in liquidity. And I remember we were looking through this coin in the group. She found this and it blew my mind. I'm like, wow, this coin actually has a lot of liquidity. It also has pretty good exchange availability, meaning it's on Uniswap, it's on Bybit, one of the biggest exchanges, on KuCoin, Gate.io. These are all huge, world-renowned exchanges. And the beauty of this is that it's also slightly undervalued. What do I mean by that? The reason why it's undervalued is because it's not on Coinbase and it's not on Binance. So that's good. That's good for the undervalued nature of the coin, because if it does eventually launch on Coinbase and Binance, then this would be very, very, very positive for the price action of the coin. The coin can go crazy if it does launch on there. So when it comes to altcoin fundamental analysis, this is what we call in the master strategy, the micro liquidity, assessing if the liquidity level is good for trading and price impact. Now, the next step is to analyze and understand the use case to see if it's a use case that's going to go viral right now in today's day and age. So we're going to look into the protocol briefly and try to understand it. So we can go to the website here and we can see that this is an AI coin. So this is basically, I've already looked into it. It's an AI coin with AI agents, autonomous AI agents that can create art. Now, just based off of experience, I know this is a big use case. This project is very interesting because in the AI world, this is one of the hottest topics, the biggest subjects, is autonomous AI agents. So I know just off of the use case and just off of my experience and studying the market in general and looking at the news and just being involved through experience that this is a good use case. So that kind of checks off that part of the actual research strategy. Now, if we go to the next one, we have to find the tokenomics. So the tokenomics is basically the token's economic model. So let's look into their tokenomics. And sometimes it's at the bottom of the website. Sometimes you got to do a little digging. What I like to do is use AI to my advantage to figure these things out. So like most of the time, guys, it's going to be at the bottom of the website, but this website's a little weird. So it's not really showing it. So I think it could be here in writing, right? Let's see if we can find the tokenomics. I could Google it too, right? So what I like to use is ChatGPT. So bear with me. Let's use some ChatGPT. I have this coin called Virtual's Protocol. Can you please help me find the tokenomics of this coin? And trust me, ChatGPT is like your best friend. I use it for pretty much everything. So let's see if we can find it. If not, what you could do is you could actually give it the website to see if you could scrape the data a little bit more for you. It kind of takes away a lot of the time. So you can just copy this, come over here. Okay, see how I just pulled it? You want to make sure it's the correct thing though. Like sometimes it can give you the wrong answer. So first off, what's the token? The token is virtual. So it looks like it's correct, but I want to get the exact link, right? Give me the exact link for virtual protocol, like the exact link where I could find it. And I think the exact link right here is in sources. So we have the white paper there. So this is good. So this is kind of like just confirming that it's the right coin, right? So this is the right coin. This is actually the white paper. This source right here confirms it, right? So we can look at it. Now, this is a little bit of a science, but the point is you want to make sure that there's no manipulation involved. So they gave 60% to the public. They have an ecosystem treasury of 35%, and they're doing it for community incentives, ecosystem growth. They're essentially paying it out to people to grow it, and they put 5% in the liquidity pool to ensure liquidity, right? So this is interesting, right? And it's not like that bad. You have to study other coins. You know, there's no perfect system, but the gist is you have to understand it, right? Because let's say hypothetically, it was like the team got 95% of the coins. If the team gets 95% of the coins, obviously it's a bad thing. It's very centralized and they can sell it anytime they want, right? This is, horrible, but they're giving out 60% of it. So that's a really, really good token distribution. Now, if we look at the token utility, each AI agent's token is paired with virtual in its liquidity pool. So if you create an AI agent, the token is actually paired with the AI agent that you create. Creating a new agent requires a certain amount of virtual, establishing the agent's liquidity pool and creating deflationary pressure for virtual due to the locked nature of these protocols. Very interesting. So this is taking more coins off the market, right? to ensure that the price increases. This is all very, very good for price increase, right? Because it's simple supply and demand. The more coins you take off the market, the more the price increases. Now let's look at this. Transaction routing currency. To acquire agent tokens, users must convert their assets from USDC to virtual, which serves as an intermediary currency. This mechanism consistently generates demand for virtual, similar to how ETH functions in the Ethereum ecosystem. Again, another reason why people are purchasing the coin. There's also a facilitating on-chain agent economy. Users compensate AI agents for services on a per-use basis using virtual. So if they have a use and they want to generate income, they use the coin. That's good. And they also have revenue streaming. This continuous on-chain payment stream in virtual ensures transparent and efficient revenue collection for AI agents. So the point is, we understand the token distribution. We understand the utility of how it's being used. And you really want to get that. And when you start getting into making reports, which I teach the group, you can actually create a report so you never forget it and you never have to re-research the coin and you really know what you're investing in. The biggest reason why people lose money in crypto is because they just simply do not know what they're investing in. They have no idea. They're not doing this type of research. So the checklist kind of breaks that down so you understand, because there's so many different token distributions and utilities that I've come across that are like basically scams. And you would have known they were a scam if you just simply read into it a little bit, right? This is super important. Now, the next part of the strategy is to actually track the team. Investigate the background, experience, and track record of the project's team. Now, this is a deep study. I'm not going to do all of it here, but just to make your life easier, you can simply do this. Hey, for this coin, can you give me all the details on the team? Are they anonymous? Are they public? Give me all the details and all of the credibility of the team. And ChatGPT will actually pull it together for you. So it does a lot of work. If you use ChatGPT the right way, it's over. Like, you can find like some really, really good coins. So it's co-founded by this guy. I'm not even going to try to pronounce his name. And 10 full-time employees with a robust background, including experience at institutions as Harvard, MIT. I mean, that's insane. He serves as an AI advisor to the team, pursuing a PhD in computer science, an AI researcher, and adaptive intelligent robotics lab. So the credibility is obviously insane. Now, I have a system for this that I'm developing that would track it a lot deeper, where you can essentially gauge their credibility 1 out of 10 based off of variables that I predetermine. But in general, this is amazing. It kind of shows you the gist. You know this is not a scam. So it has liquidity, like it's not a scam. The team's not a scam. The tokenomics are a scam. This project looks better and better as we research it. And if you do this well, you can essentially score these coins 1 out of 10. You can score these coins 1 out of 10, and you can compare it and contrast to all the coins within the same ecosystem. This is what you call fundamental analysis. Now let's move to the next part of the actual system. You evaluate the marketing. Now, we could look into the marketing outlets. You could simply ask ChatGPT, can you give me all the links for their social medias and give me information on any marketing campaigns they've done in the past to really, really look into this. And so let's see if we can get some information here, and then we can do some more digging later. So it's searching the web. It's going to give you the links. So that's their website, GitHub, Twitter. Let's look at their Twitter. So I'm going to search Twitter, and you can see they have 91K followers. They actually have real engagement. So there's people actually engaging with the coin. This is a really good coin. 115K. Look, this is insane. They have a lot of credibility. It seems like they're getting a lot of people. 103K. On this meeting here, we have 103K. 7.4K tuned in. These numbers are really good. 77K for a project like that. This is insane. They have a lot of credibility and people are definitely following them. I'm going to follow them myself. Now, as I continue to research, just understand that I'm briefly looking over these things. So for example, marketing, I'd be looking into all of their social medias. Not only that, but I'd be looking into specifically their campaigns, like maybe times that they spent money to get awareness. At what time did they do it? Did they do it in the right time of the market? How effective was it? Did it lead to price increase of the coin? There's actually something we use called timeline price analysis, where you can go through the timeline and history of the coin to see exactly when the price moved. So for example, you might see a candlestick, a big candlestick, a big price move to the upside, and there could have been a campaign that was launched around that time period. And essentially what you're doing is you're weighting it to see how good they are, how effective are they at getting results, which is people buying their coin, right? And so just to be clear about every variable here, when it comes to the micro liquidity, the use case, the tokenomics, the team, you could dive extremely deep. All these places you could dive really deep. But for the purposes of this video, it's literally impossible for me to sit here for 50 hours to give you guys that deep dive. Like I said, I spend anywhere from 40 to 60 hours per coin diving extremely deep, developing research reports on these coins to ensure that when I do buy a coin, that I don't lose my money. That's the difference between someone that takes it like a professional versus another person that's just kind of gambling, just trying to figure it out as they go. Cryptocurrency is only lucrative if you treat it like a professional, right? I showed you guys, a lot of people lose money in this market. A lot of people, it's high risk, high reward. So you must hedge it with professionalism. So I just want to be clear. This to me is like a brief look through. What we're doing in this video is brief. And as I go deeper, okay, it'll take me 40 to 60 hours per coin. And just the team itself can take like 20 hours to really dissect their lives, see how much credibility they have, how much results they have, what is their experience exactly, what mistakes they've made in the past, who are they connected to? Like, are they connected to this person that's from MIT, or are they connected to a scammer? These are all things that I take into consideration before making my investment decision. It gets very deep, extremely deep. So I'm just laying out the structure for you. So let's move on to the next part, which is regulatory environment, right? And this is an easy section. What I'm doing is essentially looking at the current regulatory environment and seeing if the actual coin violates any principles in America that will hold it back from increasing in value. Like, for example, XRP in the lawsuit, right? This was a very inhibiting factor for XRP. So if the coin that you're looking at has a regulatory environment that's not favorable for the actual project, then it might be something to score on a low end, right? These are like cards, like basketball cards, like Pokemon cards, and you're essentially comparing and contrasting. So what I'll do, and this is a universal thing, it's not just individual projects, but what I'll do is I'll go look at other AI coins within the same exact niche, and I'll compare and contrast them. I'll literally rate each part. I'll rate the micro liquidity, the use case, the tokenomics, the team, the marketing, the regulatory environment, recent news. I'll rate each one of them, and I'll spend a good amount of time, and then I'll compare and contrast them. And this would be what basically makes my investment decision. Most people don't do this, right? You have to look at everything. We research the top 100 coins of every category to make sure that the ones we buy are the best coins. This is the type of diligence you need to be around, man. Like, why do the research yourself when you could have other people that are doing the research and you have a community of people that are all doing the same research? And so this is what the community, so important. It's so important to get involved with at least somebody to help you out, because you're only limited to what you could do. But when you're around 100, 200 people, then your opportunities are endless, if that makes sense. Now, again, for the purposes of this video, I'm going to go through it quickly, but I could ask ChatGPT, when it comes to regulation, does this coin violate any regulations that are currently in act right now as we speak when it comes to AI or, generating images and graphics with autonomous agents, or any cryptocurrency regulation that you know of? Can you please list it out for me? And this is where AI comes into play. We even have some people in the group, potentially, I don't know, we haven't talked recently, that can generate reports based off of AI. So right here, we have AI generated content, deep fakes, non-consensual content. So they're not doing deep fakes. Election deep fakes, obviously there's a ban on that. Operation controls, the deployment of AI agents capable of autonomous action raises concerns about unintended malicious activities. Experts suggest implementing identification measures for AI activities and setting operational limits to manage agent behaviors. I don't really see a regulation there. So we have the classification of digital assets as securities. That's for every crypto. Data and privacy protection. It looks like it's fine. We just have these content ownership, and we have like the deep fakes and non-consensual content. But I feel like that's not that serious. That's not like an outright ban. It's a ban to a specific type of content generation. So in general, I'll look into this more detail, but from just briefly overlooking it, it doesn't look like there's any regulation that would hold this project back. It just looks like it's pretty straightforward. It's just an AI platform that generates content and has a coin attached to it. But there could be some DeFi protocols. For example, we have that betting website. This Polymarket website is actually banned in America, right? So Polymarket specifically has a limitation. So if America basically lifts that ban for whatever reason, because you can't do this in America. Like you cannot bet unless you use a VPN and do illegal stuff, but you can't in America. If they lift the ban, then this would help Polymarket a lot, right? So there's things that will hold a coin back when it comes to regulation, and understanding it is extremely important. And the last part of this video is you just got to make sure you keep up with the news, right? Make sure you're looking at the news, making sure that there's nothing crazy happening, like basically them getting hacked. You could also keep up with the positive news, like if they get listed on a centralized exchange or something like that. You know, in general, you want to make sure you keep up with the news. I'm not going to go into that for time's sake in this video, but the point is to understand what's going on with this coin, right? So you can come over here, for example, and we can see that on X, right, they just launched something October 16th. So this is not recent, but Pond Hub and Agent Virtuals.io powered by Pond GNN. So it will harness the collective intelligence of Pond's current future decentralization model. So this is kind of news. This is 8 hours ago. You'd have to look into see exactly how much news this is. I don't know. I have to dive into it deeper, but you just want to make sure that people do not get scammed. Like seriously, you got to make sure that the hacks are, outlined. This is also why I've always recommended keeping it lower than like 7 coins, because how could you keep up with all the news and all the coins? It's like literally impossible to keep up with all the updates. So in general, you want to make sure you keep your eye on the news, and this is very important. And it's also a part that most people just ignore for some reason. I think it's just laziness, or I think they just don't get involved with crypto. They buy the cryptos and they just leave. But for some reason, people really, really avoid following up with the news, and that's not how you should be investing. You should make sure that your investments are safe. You have to know what's going on with all of your investments. So just to go through it, we seek the market trend, right? Understand the direction of the market. Are we in a bull or bear market? Then we looked into the liquidity of the actual chain that we're going to be investing in. Then when we find an altcoin on that chain, we break it down by these variables that we went through, right? This is masters. This is the master strategy. This right here overall is the smart strategy, seek the market trend. We have the deep strategy here, DEEP, right? So you guys can remember it. And then we go into the altcoin fundamental analysis, which leads us to the last part, which is risk management. And then we track our trade. We have to make sure that we track it. We have to make sure that we are not losing or making money, right? We have to track and make sure we know the exact price that we got in. We have to understand exactly how to get out with the right liquidity pools when we sell, right? We have to understand all of these things. That's all part of tracking the trade. But let's go into the risk management part, which is the Martingale. A lot of people say dollar cost average. I don't believe in that. I believe in risk management using the Martingale. Let me show you why. Now, the Martingale is very simple. When you buy into a coin, so now that you know that you like your coin or whatever, you've shifted through a couple 50, 100 coins, whatever, and you know that for a fact you like the coin that you want to buy. Now the next part is to actually enter the market. So let's say hypothetically you want to enter with $5,000, right? You could pick the amount of times you want to be wrong. So essentially what you're doing is you're buying in. If you're wrong and the market drops, you double your money. So like this gives you the exact dollar amounts that you double by. This is our software, coinpicks.io. You can get access to it for 100% free. But you essentially put your first position, and if the market goes down, you double it. And the whole point of that is when the market goes back up, you make significantly more money. Let me show you examples of this. So here's a very clear example of the Martingale strategy when the price of the asset is going up, when you're in a bull market, right? So for example, right here, if we purchased, right, the price of the asset goes up, you won, you have a 15% gain. This is amazing. Now, let's say hypothetically, you purchase here, you lost. The market goes down at a 7.5% loss, right? But let's say right at this point, you double it. So for example, let's bring it up. Right here, let's say you put 714 and then you doubled the second one. So you lost the first one, it went down in value. You doubled the second one, as you can see right here, you double it. When this goes up in value, right, for a 23.5% gain, you're making all of the money you lost back here. So just imagine, right? This position you bought here, it goes down. You are currently down, but if you hold that position, it goes up. And if you buy here, you're doubling it. So this is significantly better than dollar cost averaging. Let me show you another example with flipping a coin so you understand what I'm saying. All right, let's go through it. So as you can see right here, Martingale strategy with $5,000. The first time you bet the coin flip, let's say you win, you just made 714 because your first original bet was 714. Remember, let's look at this really quickly. Look, 714 1,428, 2,856, right? So if you come back over here, you make your first bet, your new balance, you're up $714, right? Now, let's say you bet 714 again. You lose your first time, right? You bet again, right? You bet again, you lose again. Now, this is where the Martingale gets crazy, and I'm glad it showed this because you notice that he lost 1, 2, 3, 4, 5, 6 times in a row. That means that as you double it, every single time, if you just double it, you look at how this is doubled, right? This is doubled. So 714 and it's doubled, right? Keeps doubling it. When you do win, because you lost 1, 2, 3, 4, 5, 6 times. If you keep doubling it, when the person does win, they have essentially made an extra $714 profit. Look at the starting balance, which is right here. Look at the ending balance, right? The person actually made money, even though they lost all of these times. Even though they lost all of these times, they've made money. So the point is, if you keep doubling, it makes up for all of the losses. Now, it's different in crypto because it's not a 50-50 chance, and you don't lose your money when the market goes down. When the market goes down, you're not technically losing your money. You're losing a percentage of it, but you get the point. Martingale is way more effective for volatile asset classes. Dollar cost averaging is randomly buying with no strategy. When people dollar cost average, the whole point is that you're just putting a small amount of money in the market over a long period of time. To me, it's not as effective as this, which is doubling and making way more money, because as you become incorrect, you make more money. The more incorrect you are, the more money you make. Because if the market keeps falling down, you keep doubling. When it does go back up, you make a whole bunch of more money. So this is way better for timing the market, if that makes sense. Now, let's look at the last part, but it's also one of the most important right here, tracking the trade. A lot of people made this mistake last cycle. They didn't track it accurately. So let's dive into it. It's very simple. You just have to know the asset you're buying, the actual trading strategy, how many bets you're going to make in the Martingale. Are you using 3 positions? Are you using 10 positions? Because, for example, you could actually switch it, right? The more positions you use, right, the more bets in the series, let's say you use 10, the more chance you have to make errors. It gives you more room for errors. So the least amount of bets you have, the higher risk you're taking it, right? I usually use 3, but if you're not just new to this, you could use like 5 to 7. I think 5 is the best, just to make sure you're not getting wrecked and buying at the wrong time. But the whole point is to know what you're going to do and make sure you have the right amount of money for it, right? You can't Martingale if you run out of cash. It's one of the biggest problems with Martingale is that you run out of cash. So you better make sure you have enough cash to keep buying. Also, the exact entry time. Also, try to predict, if you can, the exact exit time. When are you going to exit, whether it's price or date, right? And then you could also put the trade duration. And then here's a hypothetical. But the main point I want to, explain to you guys, and you could use this template if you want, but the main point is you just want to know exactly how much cash you put in the trade. Dollar amount, right? You want to know how much dollar, you want to know exactly how much of the coin you have and at what average price you bought it at. That's it. You want to make sure you know the entry price. One of the most important things, so you know if you're in profit or in loss. So when you look at your portfolio, you'll know if you're up or down to make investment decisions, right? It's super important that you know this, right? And so also a lot of times people lie to themselves. There's like a lot of issues emotionally where someone's like down on a trade and it bothers them a lot and they don't want to face the truth. This will have you face the truth. Tracking the trade seems simple. It seems like everyone does it, but last cycle, everybody made this mistake. They did not track their trades. They didn't track what they were doing, including me, and we made a lot of mistakes. So please track the trade and be a professional about it. All right, so that completes the strategy from an overview perspective. Just go through the entire video a couple times if you have to. What I recommend you do as well is if there's a new coin that you want to research, pull open the video, screenshot the parts where I revealed the strategy for my course, and just look through it for yourself. 100% free. Enjoy, guys. I want you guys to win this bull market. And that was my goal for this video, to kind of make a video that you guys can reference, right? That's why I dove so deep, and to try to wake you up, because a lot of people are not taking this serious. So in general, I want you to know that this crypto cycle is going to be very lucrative. But please don't fall into that gray area category. We call it the gray area. And the gray area are people that kind of know what they're doing. They spend a little bit amount of time and they're making money, but they're missing out on the big fish. So for example, you guys know I love what XRP is doing. It's up like 300% in the last 30 days. But the coins that I'm buying, it should do like a 20, 30x. So don't get caught worried about the small things right? And this is primarily what the most people do in crypto. The ones that are least smart. They take it a little bit serious, they make a little bit of money, and they get like a 5x for the entire market. Their whole portfolio 5x's, and that's amazing. Most people don't even make that. But then they miss out on the 40x because of their pride. Because they didn't want to learn, because they didn't want to reference a community, because they didn't want to try harder, they miss out on 35 multiples, and they have to wait a whole another 4 years for the next cycle to make money. So the goal here is to maximize your time in this market. Treat it like a professional, because there's a lot on the line. There's a lot that you can lose if you don't treat this serious, guys. So again, I just want to say very clearly, it's time to change, please. It's time to change. It's time to take crypto serious. And I'm going to start dropping the greatest videos on the internet when it comes to research. That's my goal, to get as aggressive as possible in researching. And this is why I'm closing my groups completely. Until further notice, I will let you guys know when I reopen it. And it's going to be a completely new course, a completely new product. It's going to be phenomenal. I'm excited. But thank you guys for watching this video and being a part of my community. I really appreciate it. I hope you understand, why I'm closing the doors. Don't get upset with me. But I did give you guys a lot of free game. I'm going to continue to give you guys the best research in cryptocurrency as much as I possibly can, just because you guys support me. Thank you so much for being a part of my community. If you like the quality of this content, hit like. If you don't, leave some constructive criticism, subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. Catch you guys in the next video. Thank you for watching.